this looks like an area that might be ripe for a selling opportunity. The E period just opened up, and I'll tell you why. Going back on the 5-tick reversal chart, the 60 area is where resistance is, and we're right under that. I don't typically like to take trades in the mean though. I like to take a little more asymmetrical trade locations, but we're going to watch the retest and see if when it comes back up here to the 59s, what kind of volume there is, and that might give us an opportunity. Pause the video and keep a look. Boy, the volume just dropped off here. There's nothing. I mean, there's obviously volume, but 100 here, a couple hundred there. On the retest, it's certainly not like this push up. 3,000, 4,000, 2,000, 3,600, 16, 18, 16. We're going to take the 58 1/4 short. 58 1/4. We're also on this trade going to reduce our stop to 2 points. Yesterday and a few days before, we had 3 points if we didn't get filled on our first contract, which enabled us to then put a stop in a couple points above our entry. If we didn't get filled on the first contract, we were putting a stop 3 points above our entry. We're going to bring that down to 2 points, so that it's 2 points after we get filled for the first 1.5, or it's 2 points if we don't get filled for the first 1.5. In this case, 56.75 is our target for our first 1.5. At that point, we'll put our stop in at 2 points above our entry at 58 1/4. If we don't get filled on the first contract at 56.75, our stop remains the same at 58 1/4. Now, like we've been talking about, it's important after the market makes the cross trade, retest the cross trade, that we hit the bid, that we initiate trade on the bid. Not bounce around here in a consolidation. If we bounce around here in a consolidation, I might even consider limiting our stop by even more than that. And once we get above maybe 59, get out between 59 and 60 1/4. That's probably challenging to do because sometimes the markets move quick. By the time you exit the market, you could be significantly higher than if you just had a standing stop, or significantly lower compared to if you just had a standing stop in the marketplace. I'll have to think about that. But for now, we have a standing stop at 60 1/4. We could always cancel the stop and adjust our strategy. What I don't particularly like now is we only hit the bid on a couple price levels here, and we didn't hit the bid any further. We're 7 minutes into the period here, so we're still early in the period. We'll pause the video and see if we can't get some initiative bid activity here. Where the market died here, we just see a little bit of bid activity, nothing initiative past this area here. As this doesn't occur, the risk in this trade rises. That's something that I have to keep in my mind as sort of a relative strength indicator in my mind while the trade's progressing. Those help me to identify the probability of our stop getting hit, hence even helps me to identify reevaluating that hard stop strategy and maybe getting out quicker or even taking profits at an 85, 58, 25 fill. See, we could have taken profit at 57, 25, recognizing that that wasn't occurring. So that's sort of interesting. Now we're going to watch the deltas building now, negative in the pullback column, but we're not initiating activity. So I think at the first opportunity here, if we click 75, 57, 75, there's a good chance that we're going to pull out of this market at the market. I just don't like this trade, and wait till a little later. We're going to take the 58s. We're out of here at the 58s. Neutral. Flat. We try to use the market data to evaluate the position and make the decision that the trade didn't work out before we were actually stopped out with a 2-point loss times 2 contracts. That's no good. It's better than a 3-point loss times 2 contracts. I think I like the 2-point stop better. But it's if when you get in based on the criteria of a cross trade and you consolidate and nobody hits the bid on an initiative fashion, the probability changes that the market's going to test a higher area. And I have no problem getting out at a break even. I have no problem getting out at a 0.25 gain, or I have no problem getting out at, half a point or a point loss. But after that debacle in the early part of February and latter part of January, the hell if I'm risking 5 or 4% on a trade. I'm smarter than that. I can use and analyze the data faster than that. So that's where we are. Now we'll look for a position after probably the E period closes. We'll let the E period do its thing, see if in fact it can get back up to the B period high in the 61, 62s, and see what the volume is up at that area. Now, see, revisiting that thought, see what's happening now. Remember that 3900 cross trade was in the 5850, 5875 area. Now we're pushing above the 5850, 5875 area, and there would have been a real good chance that our stop at 60.25 would have been hit. 4-point loss, boom. Well, 2-point loss times 2 contracts, 4-point loss. It takes a significant amount of our morning's profit out. And we had about 10 points from the morning gain. So that's something that I didn't do in January, and it's very interesting to think about it and apply it and implement it here today. I'm real happy with that. That's good. And let the market do its thing. Push up to another asymmetrical opportunity, maybe up into 61, 62s, the B period high, the H period high from Globex, or the D period, A period high. I say the A period high, I mean today, the D period high from yesterday. And there might be a selling opportunity up there. Now, if we see a lot of cross trade and a consolidation line up at the previous resistance area where we sold yesterday, we sold today, between 62 and 64, then I would think that would help you to understand that the probability that we might be breaking out of this 5-day balance and breaking out of recent consolidation range has a good probability. Now, I certainly don't want to miss that opportunity today because I've been anticipating it for a couple days. Although I also am not watching the market tick by tick all day. I do read, I do study, and I do clean the house and eat and play with the cats and all those other sort of things. But we'll be keeping a close eye on that opportunity. In the meantime, the first objective is resistance up at 61 to 64, and keep an eye on that. We're going to go ahead and produce this video, and this will be the third snippet for today.